Alright traders, welcome back. This is Matt from zenandtheartofTrading.com, and today I'm just going to run you through a bit more of what the market's been doing the past couple of weeks. You can see, starting on Euro Yen on the daily, we've got our five key immediate support and resistance levels. You can go back and watch my other videos to see how I identified these levels, but basically this top one's a great example. I look for a zone that's been tested multiple times as support and resistance. This does work if we only have one level that's been tested as support. That can also be a key level. But the more times these levels have been tested from each side as support and resistance, the more powerful they become. Anyway, what happened this week? You can see that price retested this support zone and had a very big pop out of it. So that was a good call from last week. If you've been watching my videos, you will have noticed that every now and then I'll point out potential strategy opportunities. And this is one of them. You'll see that down here we had a very nice bullish engulfing candle right on this level. If you were to enter on this close of this candle with the 27 pip stop loss, 1 ATR below the lows, yeah, could have caught a pretty nice pop out of this market. So these levels are very powerful. They're very important. It's important that you learn to identify them in your own trading, because it's quite simple to do this. It's not rocket science. I mean, it takes me less than 10 seconds to identify each one of these zones. So there's not really an excuse not to do it if you're an active trader. What am I expecting this week? Well, given the size of this bullish daily engulfing candle, there's potential that we could build up quite a bit of momentum up into this resistance zone. It's unlikely, but possible that we break above this resistance zone, maybe come up to this zone. I say it's unlikely because this is a very major support turned resistance zone in here at 123. So, and we've got this 50-day moving average coming down that's going to act as resistance. So we will get some bearish reaction up here, more than likely, but we'll have to wait and see. This is pretty bullish, this candle here. So yeah, we'll have to wait and see, but similar to euro dollar last week, I'm not saying this is bullish, but it's certainly not bearish. Bearish trend continuation is now off the table, just like it was on euro dollar last week, which I'll run you through what happened there. That was a very interesting pair. But yeah, so far this pair is respecting the analysis that we did the past few weeks. I'll just quickly identify, why did I pick this level here? Why did this blue level act as support and not somewhere else? It's because of this. This zone was tested as support, resistance, support, support, resistance, resistance, support. Key level. That's all I need to know. That's why I put my zone there. And this time it happened to act as support, so that's really good. All right, moving on to US CAD. Now, what happened here? You can see, I mentioned last week, I spoke about this false breakout. Then we had this large move, this impulsive move lower, which technically broke this support zone if you include this gap lower. It's a bit of funky price action here, but the way I'm going to read this is that price moved down, broke and closed at the low below this low, then retraced, had a nice pop out of this support zone. But then we came up into this previous support zone that has turned resistance. We've got the 50-day moving average here and this cluster of support reaction, this support zone in confluence. So what has happened is price has jumped, reacted from the support zone, rallied hard, quite impulsively up into that zone, but dropped down to a lower time frame. You'll see I took a trade here on the 15-minute chart, and I'll run you through what I was seeing here and what happened, what I was seeing happening. So price had an impulsive move out of the support zone, creating a trending market. We've got higher lows, higher highs. Then price comes up into this resistance zone quite impulsively. If I turn on the RSI and turn on this higher time frame EMA, you see this black line here is the 50-day EMA. And the RSI here, we went overboard on the RSI, meaning that there's very strong momentum here. The buyers are very strongly in control, which is not which counterintuitively is not what you want to see coming into a resistance zone. You do not want to see this sort of strength coming into a resistance zone because they've used up all their juice. You know, the buyers have used up all their energy to move the market from here to here. And there's not enough steam left to get it through this resistance zone. You think of how many people are selling and taking profit up here. If this market comes in this impulsively, it's got no steam left. And you see it did try to move higher. We did actually get a break higher out of this zone. So we got this little retracement into the 50-day moving average, interestingly. Then a pop out of this consolidation range, making this a higher high than this high, putting us into a trend continuation play. But then what happens? Price comes down and breaks below this low, as you'll see here. It fails at all these moving averages and at this resistance zone, makes a lower low that breaks this low, and also breaks this trend line that was forming. Yeah, this is quite bearish. We've got an even handle number up here as well. And yeah, once we get this lower low from here, price basically reverses. I forgot to mention on the 1 hour, we also had RSI divergence, quite significant RSI divergence. You'll see here. Price made a noticeable high on this RSI and then quite a significant lower low that fell back within the 70 range. And I mean, this is quite a bearish sign. This is a very classic reversal sign here. Breaking this low, last line of defense in this trend continuation. I'll play a real quick clip from last week, just to be transparent about what I was seeing in here and why I thought this was a reversal situation. I won't be taking any more long trades on the 1 hour time frame until we break above this high. But I am open to taking, or my rules say I can take a short trade if we start to make even lower highs and lower lows out of this. So if we get a little pop out of this market, say we come up and test the EMA and we roll over and make another lower low, then I'll be looking for short trades. I mean, even if we get a move up to this moving average and we get I get a signal, I'll take it if it's valid, because we've already violated structure in the trend. If you see this, the price moved up to here, we had a retracement, then we moved up, broke this high. So this support zone is the next, the last line of defense in this bullish trend, and it's been taken out. Price took out this last line of defense, which this is a trend reversal pattern. It is extremely likely that we will either reverse momentum completely, come down into this zone, or we will start to consolidate between this range for a bit and it'll get a bit choppy. All right, so yeah, you'll see that if I drop down to the 15-minute time frame now, which is where I took this trade, we break this low, we retrace back up into the 50 moving average on this time frame, and we get a bearish engulfing handle with a swing high, fractal high. This is my strategy. It's very simple. I went short on the next candle, stop loss 1 ATR above the high, and I moved my stop to break even after a 1 ATR move from my entry, and this is to throughout my back testing I discovered this rule significantly reduces my drawdowns. So that's why I have that rule. But in this case, unfortunately, it cost me quite a large winning trade. You'll see price hit my 1-to-1 move target, and then I moved my stop to break even, and then I got stopped out for break even, and then look what happens. Bam. One of the biggest moves we've seen all year from any currency pair in a trading week. You know, we got 32 risk reward move out of this trade. Look how small the stop loss is compared to the profit. Obviously, I never catch moves like this. It'd be nice if I did, but I'm far more conservative with my targets. But you know, there's a potential strategy here. If you, as I get more experienced, I'll definitely be experimenting with trying to catch moves like this with a trailing stop, maybe above swing highs. If you were to trail your stop above structure highs as this move was happening, you would have caught the majority of this move, assuming you didn't move your stop to break even after a 1-to-1 like I did. But yeah, anyway, that's this pair done. It was unfortunate to miss the majority of this move. I'm actually in a trade right now. I'm in a short trade. after this bearish engulfing candle on Friday. The market opened on Monday this morning and struggled up here again. So I'm short from down here at the close of this candle. Target down at this little cluster here. So we'll see how this plays out. We are at an even handle number, which is troubling, above an even handle number. So it's possible after this failure, and we've gotten back up here, we might hold above this and actually move a little higher up into this zone. But we'll wait and see. With any luck, I'll hit my first target first, and I won't have to worry about that retracement. What's likely to happen next? Well, price is within a free fall zone. I'll just change this to red now that we're below it. This is going to act as a potential. This is probably going to act as resistance now. And yeah, we've broken below this zone very impulsively. It's significant close, no doubt about it. We're in a bearish trend now. We've got lower highs coming in, lower lows coming in. It's very likely that price is going to fall down into this zone where we'll probably get some sort of bullish reaction out of here. So if my short position does play out profitably here, I'll be probably looking to take off targets down here if I get a bullish reaction. So yeah, we'll wait and see what happens there. Nice. This is a nice free fall zone. This is a great condition for intraday trading strategies. You could look for anything in here: flag patterns, pullbacks, breakouts, you name it. This is a good time to be looking for reasons to get short with a good stop loss placement to try to catch the rest of this move. Let's move on. Euro dollar. This has been a fun pair actually to analyze. It's been doing some cool stuff. It's been jumping around. It's been reversing trend. It's been respecting my analysis. It's always nice when a pair respects your analysis. I always warm up to pairs that that do what I expect them to do. So what happened here? This is very interesting. We've got descending parallel channel here. It's not the cleanest channel. I mentioned in a previous video why I have this trend line here. The reason is because it gets the most touches of these pops out of this market. We got 1 touch, 2, 3, 4, 5, 6, 7, including this breakout, and then you got 2 retests here. So this is a pretty. I don't trade trend lines, but this is an important level to watch. I mean, if I don't trade off trend lines, but if I were to take I didn't take any short trades in here because of this trend line. So you know, I do use higher time frame analysis as a discretionary filter in when not to take trades, but I don't take trades off these. So it's because they're too subjective and vague. I like much cleaner levels, like these support levels here. These are the kinds of levels I prefer to trade. Even this sort of chop in the middle here, I'm not a big fan of. I prefer these outside levels because they offer a cleaner picture of price action. But anyway, price broke out of this trend line and this resistance zone at 125, making this a potential trend reversal situation, which I mentioned in a previous video. So I'll play a quick clip from last week actually talking about what was happening here with this trend line, because it was very interesting how price played out last week following that analysis. And then I'll move on to what I think is going to happen this week and what's going on Aussie yen. 6 touches of this trend line. We've broken through it very impulsively, and we've retested it twice. We're making our second retest on this trend line now. We've got a little bit of structure, a little shelf in here of structure, support, previous resistance that could turn support in here. It's not the cleanest. It's not the cleanest zone, but given the fact that we have this trend line in confluence and we've just broken higher out of this range, it's quite bullish. It's quite bullish. I'm not expecting a huge move out of this pair, but I'm not so convinced that we're coming down to this blue zone. I think we might chop around in the middle here and head a little higher, and then who knows what will happen. All right, so you can see price did find support on this trend line and in this little shelf structure shelf in here. You see we've got support here, resistance here, support here. This little zone in here at 112, although I wouldn't call it a major zone, not as major as this zone down here, it is a zone to pay attention to. And so price got into this zone, which was in confluence with the retest of this bearish trend line. And these trend lines, just like support and resistance, once they're broken, they can often reverse their roles as well. So as this was acting as resistance all year, now it's acting as support. And price jumped off this level quite impressively. I mean, this big candle here that broke through this resistance level did change my bias a little bit. It made me much more bullish than I was when price was down here. And so I actually took a trade last Friday at the high of this candle, expecting the next candle to move into continuation. And I happened to get that. This was a good call. I'll just drop down to the time frame I took this trade on. So you'll see here, price is testing the other side of this trend line. We get this little move in here. This is an important resistance level. You see, you had a very bearish reaction off there, but it didn't last long. Price really wanted to move higher here. So we got this move lower down into this trend line and this little structure shelf. Then we get a move back up to this resistance zone and then a very shallow retracement. I mean, this is extremely shallow given the significance of this, how significant this zone should be. So this should get your attention if you're trading. If you're watching this happen at the time, this should get your attention. After seeing this, I was pretty confident that we were going to get a break and close above this zone. And we did get that. I didn't get a trading opportunity in here because of this consolidation range. I don't take trades in a zone like this, as I mentioned last week. I was a little nervous about this zone for good reason. And but price cleared through it, no trouble. And then the next day, or overnight, the next night, I got this little pullback candle set up here. And when I woke up the next morning around 8 or 9, I entered my position. Stop loss down here. It was quite a wide stop loss, but I was happy to have my stop loss down here because of this move. I was a little nervous of a slightly deeper retracement. We had this moving average coming up, protecting my stop a little bit. Potentially, if this were to start acting as support. And I've got this little structure shelf in here protecting my stop and this big wick here. So I didn't mind taking this trade. We got this potential reversal happening here. Price did indeed rocket upwards. Took out these highs up here. To my own surprise, I actually didn't expect price to go into trend continuation. If you remember last week, I said I was not expecting a big move like this. But that's why I trade price action strategies and I don't trade what I think is going to happen because I'm often wrong. So my strategy got me long in this move despite my doubts that price could break these highs. My first target, I took off at a 1-to-1. So my first target was down around here. So that's why I took this trade. I wasn't too worried about this target being hit. But I did have my doubts that price could break these highs, given the daily trend being, the momentum being to the downside. But that's all changed now. Let's drop out to the daily. This picture is changing. We've got a higher low now. We've got a higher high. This is a classic trend reversal pattern. Now, we've got quite a few resistance zones coming up. This is the most immediate one that I can see, between 114. I'll draw in a little zone real quick because this is quite a big area in here. I'd probably draw it around that, like that. It's a little large, but it's pretty comprehensive. I'm going to expect price to struggle up in here, especially if the RSI goes overboard again, like it's been doing a lot lately on some of these pairs. So going forward into next week, I'd expect buyers to show up in here. So if you're trading, if you're not involved in this move and you want to catch it on a lower time frame, looking for pullback entries into this zone up here could be a good play. But there's also a chance that price could retrace a little deeper. If that were to happen, it'd probably come down into this 112.5 zone down here, into this red zone, which I will turn to blue because now this is acting as potential support, not resistance. I'll change this zone to red just to avoid confusion. And yeah, on this pair, I am now bullish enough to expect price to come up into this zone. Potentially even, I have to draw in another zone now, as I like to do, because this one's been broken. So price could just rocket up and break through this zone. If that were to happen, where would I expect price to struggle next? Up in here. Beautiful, beautiful level. Love it. Very clean and obvious swing high here. And look at all these tests. Support, 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 support. A little bit of resistance. And then big move lower from here. So this is going to be a good level. Keep that in there. And yeah, I'm not expecting price to get up there, but I wasn't expecting price to get up here either. So you never know. We'll see what happens the next few weeks. I'll trade what I see, not what I think, and I'll update you guys on how that goes. Until we break this low here, I'm bullish. All right, moving on. Last pair, Aussie yen. Not much to say about this pair, so I'll be real quick. We are reacting off this 4-hour zone. If you remember last week, I mentioned the importance of this swing low on the 4-hour time frame. Because this is a giant wick on the daily chart, doesn't leave us with any structure. This is a zone that traders will be paying attention to. And sure enough, we got a bit of buying out of here. We are making lower highs into here. So we're making a bearish continuation consolidation pattern. It's a bit of a tongue twister. Basically, you'll see here like a pennant flat type pattern. But what this is telling us is that buyers are struggling to make higher highs. But there are buyers buying this market up because we've got higher lows coming in. What that means to me is that there's potentially a lot of buyers that are trapped in here, that are trying to play this for a bounce. And if we don't get that bounce, we will probably see another sharp, probably a candle like this, you know, as we blow through these lows, take out everyone's stop losses. But the opposite could also happen. If we get any sign of strength for the Australian dollar or any weakness for the yen, there's probably a lot of trailing stops from people that have been short from all the way up here. They're probably trailing their stops above highs. So all it will take is price to start taking out these highs, and all those trailing stops and short people who have opened short positions down here will be getting wiped out, and we could get the opposite. Big daily retracement candle up into 7.5 even, or even up into this red zone. That wouldn't surprise me. We do have a market that is fairly oversold, or not oversold, but fairly bearish, strong bearish. I mean, we've been under 30 on the RSI since May, really holding this lows of the RSI. And you'll notice we also have a shrinking ATR, which is, these two in confluence is very interesting. This basically means that price is extremely bearish right now. We got a lot more red candles than green candles, but the candles aren't that big. We got a shrinking ATR. Shrinking average true range means that the candle sizes on average are getting smaller and smaller than they were up here. You can see that visually, just looking at it. But this indicator is telling us from January until now, we have been in a period of basically coiling energy. This market is coiling energy. It is well below its statistical average for price action ranges. So what does that mean for us as traders? It means that there is a very high likelihood that within the next couple of months, we will see an explosive breakout in either direction, either up or down. This doesn't really tell you which direction it's going to happen. Probably be up because of the oversold nature of this market. I don't like using the word oversold. Because of the bearish strength in the market. The RSI is this low, and price has been this sold. You know, people have been shorting the hell out of this. I mean, this can't go on forever. That's what this means. So that's why there'll be a pop soon. Not because the market's oversold. There's no such thing. But because the sellers may be getting exhausted. I mean, there's only so much selling you can do before someone steps in to buy. I am expecting price to come down to this blue support zone over the next couple of weeks. But because of these two indicators in confluence, they're suggesting that we are approaching a very interesting time in this market. It's quite rare to have an ATR that low on the daily chart. I mean, this only happens on a couple of pairs a year where the ATR shrinks that low. So yeah, there's going to be some interesting times coming up on this pair over the next few months. I'm fairly sure of that. Which direction it'll go, I'm not 100% sure. But if I had to bet, I'd bet on a sharp retracement, but eventually a move lower at some point. So yeah, I'm not bullish on this pair, I'm bearish on this pair, but I am expecting a relief rally at some point here because of the lack of bearish momentum. But till the trend changes, till something happens like on euro dollar, until we get a break and close above these highs up here, the trend is bearish for me. So yeah, expecting price to move lower, but who knows? But we'll see. We'll see how this pattern breaks out. We won't have very long to wait before we know which way this will break out. I'd say by Tuesday's market open in America, we should know which way this is going. Yeah, so we'll wait and see how that pans out. All right, that's it for this week's analysis review. Thanks for tuning in. If you want more information, read the video description. I've got a bunch of links in there to where I learned all this, and also to my website where you can find my Forex trading journal. You see every trade I take, and yeah, a bunch of other resources on there. So thanks again for watching. Have a great trading week. I hope this was helpful to you. So yeah, leave any feedback below. If you want me to cover anything else, any other pairs, or elaborate on any particular part of my process, let me know. If not, I'll be back maybe next week, maybe the week after. We'll see. Depends how the markets play out. Depends how many trades I take, and how much I have to talk about. But so far, all these levels still holding. The only pair I had to draw a new level in was euro dollar, and that's right up here, which will not be getting tested these next couple weeks. I imagine it will take at least a couple months to get up here, if we even get up there. Euro yen, bearish trend. We're in consolidation now. Pretty bullish reaction off this support zone. I will be catching intraday long opportunities up into the zone if I get any. US CAD, bearish trend, free fall zone down into support. Good time for catching trend continuation opportunities on an intraday time frame, just like euro yen. Euro dollar, I'm already involved in a trade. I'll be trailing my stop loss below lower time frame structure. Right now there is no lower time frame structure, so my stop is at break even, and I'll probably just leave it there and wait and see how price reacts today and tomorrow. Anyway, that's it for this week. Thanks for tuning in, guys. I appreciate your time. I hope you found this a little helpful in some way. And yeah, I'll speak to you soon. Have a great trading week. Trade green, follow your plan, all that. And yeah, good luck and goodbye.